Have you ever wondered if you could be missing out on hundreds, or even thousands, of pounds every year without realizing it? The surprising part is that many valuable benefits and tax savings don't arrive automatically. In many cases, all it takes is filling out a form, ticking a box, or making a simple request. Welcome to Pension and Benefits Guide, where we help you stay informed about pensions, government benefits, and important financial updates that could make a real difference to your retirement. Today, we're looking at 5 financial benefits and tax opportunities that many pensioners overlook, not because they don't qualify, but because they simply don't know they need to apply. Let's start with the first one, and this could be one of the most valuable. A. Here's what many people don't realize. Receiving attendance allowance does not reduce your pension credit. In fact, for some people, receiving the higher rate of attendance allowance can unlock an extra amount within pension credit known as the Severe Disability Edition, worth £86.50 per week for the 2026-27 tax year. If you live alone, receive a qualifying disability benefit, and nobody receives carer's allowance for looking after you, this additional amount could make you eligible for pension credit even if your income was previously just above the limit. And here's where the real impact becomes clear. Once pension credit is awarded, it may also open the door to other valuable support, including council tax reduction, the winter fuel payment, and the warm home discount. The important point is the order. Apply for attendance allowance first, and once your award is confirmed, contact the pension credit team to ask whether the Severe Disability Edition should be included in your claim. Before we move to the next benefit, if you're finding this information useful, please take a moment to like this video, subscribe to Pension and Benefits Guide, and share it with someone who may benefit from it. Small pieces of information like these can make a significant financial difference. Now let's talk about a tax saving that many married couples and civil partners never claim. If one partner earns below the personal allowance of £12,570 a year, while the other pays basic rate income tax, the lower earner may be able to transfer £1,260 of their unused personal allowance through the Marriage Allowance. That reduces the higher earner's tax bill by £252 each year. But the most important part is the backdated claim. According to the information provided, eligible couples can claim for the previous for tax years 2022-23, 2023-24, 2024-25, and 2025-26. That could mean a lump sum refund of up to £1,008, plus another £252 for the current year, giving a total benefit of up to £1,260. If you're eligible, remember that the 2022-23 tax year can only be backdated until the 5th of April, 2027, so it's worth checking before that deadline. And because the application can be completed directly through the official government website, there's generally no need to pay a claims company to do it for you. Next, let's look at something that could catch many pensioners by surprise. The winter fuel payment for 2025-26 was paid automatically. However, according to the transcript, from April 2026, HMRC began recovering those payments from individuals whose taxable income exceeded £35,000. Instead of asking for the money back in one payment, HMRC may recover it gradually by adjusting your tax code. So if your income is above that threshold and you've received a winter fuel payment, it's worth checking your tax code to understand whether any changes have been made and, if necessary, contacting HMRC for an explanation. The transcript also notes that people expecting their income to remain above £35,000 may have the option to opt out of receiving future winter fuel payments before the relevant deadline. Now let's move on to a situation that affects many people taking money from their pension for the first time. When you make your first flexible pension withdrawal, HMRC often doesn't yet know what your total income for the year will be. Because of that, an emergency tax code may be applied. This can result in much more tax being deducted than you actually owe because the system assumes you'll receive that same payment every month for the rest of the year. On larger withdrawals, this can mean thousands of pounds being deducted unnecessarily. The transcript explains that the forms used to reclaim overpaid tax include Form P55 for certain partial withdrawals and *** Form P53Z ** for people who have taken their full pension pot or stopped working entirely. If you've made a pension withdrawal within the last 4 tax years and believe too much tax may have been deducted, it's worth checking whether you're entitled to a refund. Finally, let's look at a tax issue that many people don't discover until it's too late. If you received a backdated state pension payment or DWP benefit arrears as one lump sum, HMRC may initially treat the entire payment as income for the year in which it was received. That could push you into a higher tax band, even though the money actually relates to several earlier years. According to the transcript, it may be possible to ask HMRC to apply what's known as a relating back election under Section 569 of the Income Tax, Earnings and Pensions Act 2003. This allows the arrears to be allocated across the tax years in which they were originally due, rather than taxing the whole amount in a single year. For some people, that could reduce their tax bill significantly and may even result in a refund. The key point is that, according to the information provided, HMRC does not normally apply this automatically. A request needs to be made with details showing which payments relate to which tax years. So here's the big takeaway. If you've recently claimed attendance allowance, check whether it could increase your pension credit. If you're married or in a civil partnership, see whether you're eligible for marriage allowance and any backdated refund. If your income exceeds £35,000, review your tax code to understand how the winter fuel payment may affect you. If you've taken money from your pension, make sure emergency tax hasn't left you paying more than necessary. And if you've received backdated pension or benefit payments, check whether the relating back rules could reduce your tax bill. Every one of these opportunities depends on taking action. In many cases, nobody will automatically contact you to tell you that you're eligible. Now I'd love to hear from you. Which of these 5 benefits or tax rules was completely new to you? Let everyone know in the comments because your experience could help someone else. If you found this video helpful, don't forget to like, subscribe to Pension and Benefits Guide, and share this video with friends or family who may benefit from this information. Thanks for watching, and be sure to check out our next video for more practical updates on pensions, benefits, and ways to make the most of your retirement.